Have you taken all those courses from the gurus that promise so much result? At the end of it all, you still blow your trading account. Have you come to a point in this trading journey that you said you have told yourself that trading is a scam? It doesn't work. Are you that person that have watched countless YouTube content, watched countless trading videos, going to different seminar, different trading, you have bought several trading accounts, and in the last 3 years you have been struggling to become profitable in the financial market? If you're someone who had been going through this whole stress, implement this strategy to find golden opportunities in the markets. So let's dive into today's trading class without wasting much of your time. So from what you could see on your screen, I am on the monthly time frame. Now you will be asking yourself, what am I doing on the monthly time frame? On the monthly time frame is where you see the movement of the market, a bigger picture of the market, where the market is heading to. From what we could see, the market is heading all the way to the upside. Now, on the monthly time frame, you also need to plot at your level. Now, now before you, it's the US dollar against the Japanese yen. So I will be using the strategy to find golden opportunity in this market. So but before we dive into what we have today, let me make you understand the strategy. This strategy that I'm about to use is divided into two parts. We have the market movement and the market behavior. Now, what's the market movement all about? The market movement is understanding the direction of the market, where the market is heading to. And before us is we are on the monthly time frame. Clever picture of where the market is heading to, which is the market movement. Where is this market moving to? And from the monthly time frame, you could get a bigger picture of where the market is heading to. And another reason why we are on the monthly time frame is to plot at our major level, our major support and resistance levels. Now, plotting at your support and resistance levels helps you to understand the movement of the market, because the market moves from support to resistance and resistance to support and support to resistance. So from what we could see on this bigger picture is that the market is heading all the way to the upside, and we have plotted at all our key levels. So once you have plotted out your key levels nicely on the monthly time frame, you scale down to the weekly time frame. Now, on the weekly time frame, you adjust your level nicely. Now, I don't want to waste your time. That's why I plot out the level for you, so we could work very fast in order to achieve our goal in a short period of time. So now, once you are on the weekly time frame, you plot at your levels. So these are the levels you plot at nicely. These are the key levels. Now you scale down to the daily time frame. Now what do you do on the daily time frame? On the daily time frame, you look for the immediate trend in the overall trend. You look for what? The immediate trend in the overall trend. I repeat, on the daily time frame, you look for the immediate trend on the overall trend. Now, if you scale back to the monthly time frame, you see there is a trend line I drew. Now, this trend line is the major trend line. Now, on the daily time frame, you look for the immediate trend in the overall trend line on the monthly time frame. Once you've done that, you scale to 4 hour. Now, on the 4-hour session, there we'll be talking about the second part of our strategy, which is market behavior. I repeat, which is what? Market behavior. Which is market behavior. So on the 4-hour time frame. Now, let me a little recap on what I have explained so far. On the monthly time frame, we do two things. In order to understand the market movement, we do two things. we plot out the key levels on the monthly time frame, we draw our major trend line on the monthly time frame. Now, with the help of this, it gives us a bigger picture of where the market is heading to, where the market is moving to on the monthly time frame. Then when you scale down to the 4 hour time frame, there we'll talk about the second part of the strategy, which is market behavior. Now, in order to understand market behavior, market behavior is divided into three phases. We have the consolidation phase, the breakout phase, and the distribution phase. Now, this is how the market behaves when moving. When the market is moving, there are behaviors while moving, and these behaviors from consolidation to breakout to consolidation to breakout to consolidation to breakout. So these three phases is what we're going to talk about on the 4 hour time frame. Now, these are trades that I took on the week. These are my previous winnings. You could see these are my previous winnings. I want this trade all the way from here to here. These are my previous winnings. Now, let me explain how I was able to win all this. Now, if you could look, this is market consolidation. The market, it ranges. Market consolidation is also learned when the market ranges. Now, these are lines I draw to understand each of the phase. Now, this is the consolidation phase, which is also known as when the market is ranging. So the market ranged. At this point, I didn't take any position. I stepped out of the market to let the market range. Now, when the market is ranging, it means indecision in the market. So the market ranged, I wait, and when the market breaks out of the range, we move into the second phase, which is breakout phase. Now, this phase is called breakout phase, and the best time to trade the financial market is in the breakout phase. So when the market breaks from consolidation, retested, I took my trade here all the way here. Now, on the 4 hour time frame, we're talking about the entry and the exit. And in order to get a clear picture of the entry and exit, that we are applying market behavior. Now, this is our entry when the market breaks from consolidation, and we exit the market when the market goes back to consolidation. So in the moment the market goes back to consolidation, we take out our profit, and the moment the market comes back to breakout, we take our entry. Now, the market consolidated here. You could see how I roll it nicely. This is when the market consolidated, move up, down, immediately it breaks out. I took an entry here all the way back to consolidation, and immediately the market started consolidating, I took out my profits. Now, I waited when the market consolidated. Immediately the market breaks out, retested, I took in my trade, and the market moved all the way to the upside. Now, the market had come back to what? Consolidation. I took out my profit. Remember, we take out our profit when the market consolidates, and we get into the market when the market breaks out, the second phase. Now, the market had consolidated. It had already broken out, but we have what? A little challenge here, and this challenge is the immediate trend in the overall trend, which is what we'll talk about on the daily time frame. Now, the market ranged, it breaks out, now it came down, retested. We should be expecting the market to move all the way to the downside. What I'm saying is, we should be expecting the market taking entry here. We should be expecting the market to move all the way to the downside. But however, there is a manual trend line. The trend line in the overall, the immediate trend line in the overall trend. So this is going to be a challenge. Now, what does this mean? I ought to take my trade here, wait till when the market goes back into what? Ranging, which is consolidation, before I take out my profit. But this is going to be a problem. So what do? I wait then the price breaks through this immediate trend. Now, if the price doesn't break through this immediate trend, I'm not going to take a position. I'm going to wait. If the market doesn't break this immediate trend, I'm going to wait. I don't know if you understand. But in this other time when I took all those trade, there is no immediate trend line. The market was moving in line with the immediate trend line. If you step back to the daily time frame, you're going to understand what I'm saying. You could see how the price was moving in accordance with the what immediate trend line. So when you scale down to the 4-hour time frame, when you scale down to the 4-hour time frame, you see that this immediate trend line is becoming a barrier. So we have to wait. The price can rally all the way back up and what move all the way to the major resistance level. And this is what we're saying. So all we just have to do is to wait, which means these very opportunity had been nullified because of these immediate trend line. If this trend line is not yet, this is a good trading opportunity all the way to the next ranging, the next consolidation phase. So guys, this is the only way to trade the financial market. You could see how I have been bagging in profits in the last few months. I have been bagging the profits. You don't trade on the consolidation. You stay outside. You stay from the market when the market is ranging. You only take entry when the market breaks at, and you exit the market when the market starts ranging. That is the best way to trade the financial market. This is the oldest strategy that works in the financial market. So if you want to change your trading, this is the oldest strategy that works in the financial market. So if you stayed at the end of this video, thank you so much for your time. On our next video, I will be sharing with you how you could understand this strategy better and understand the financial market better. So once again, thank you so much. My name is William Collins. Remember, trade smart, not hard. Trade smart and not hard. So thank you so much for your time. I will see you on the next video.